Okay, folks, welcome to Market Trends. I'm David Russell, VP of Market Intelligence at TradeStation. Hope everyone's having a great day. Go through just some of the disclosures to get started. It's an interesting sort of day. There's a lot of things in the market in some ways that when you look at them technically, you could say are very positive. There's been a lot of interesting things that's been happening. But I think now we're also at a point when you have to think about the news cycle and the event calendar. And kind of in a paralysis as we now go to the debt ceiling. And one of the reasons is not just because the debt ceiling is approaching, but because a lot of other catalysts are now in the rearview mirror. These disclosures. If you go to tradestation.com and then you go on the up here to research, go to insights. We have this blog post as the materials I'm using today. If you want to start taking a look at that, if you need to download anything, we'll do it. So let me just quickly now. I have the wrong workspace here. I'm going to move this one. So I'm going to just close this. And then we're going to look at this. All right. So if you go to the zip file, it's the same zip file I've used. Good. There we go. So basically, here's our MT main. Okay. So if you're in, if you open the zip file, you will see this. Open up. It has here a bunch of these indicators. If you want to, if you need to import them, these are all the same as before. It has a series of workspaces, which I have loaded down here, as you can see. And then it has the disclosure slides if you want to review those. So that's basically what we're working off. And that is included right here, downloads available here. Okay, so if you look at the S&P here, I think that the main thing to point out overall, it's pretty interesting is, I want to just look at the SPY really quickly. I was looking at that one because sometimes the price action on the SPY is a little bit clearer than the price action on the cash index. What's really interesting here is look at the way we held this level. This was the open on Friday. We came exploding back from that post-Fed drop, and we went down yesterday and held it. So to me, this is just one more sign here that there are not a lot of there's not a lot of selling pressure in this market. So I think right here we have this double bottom that held it right around here, the low of April. What's interesting, another thing is that this was the entire low, the entire month of April. The low was right there at the bottom of the Keltner channel on the 26th. So that's interesting. The other thing that's interesting is that now we have another double bottom. We opened at that level, that was the low, and we held it again yesterday. So this is a spot where we can look back, we can see support, higher support. It's interesting to see these pieces coming together. I wanted to just kind of point that out because these are some potentially interesting patterns. All right, so I put this in as a range, and this is a cash index, and the bottom of my range here is down here. But it's interesting to see if we hold this level. I mean, it could be very interesting because we could be actually setting up here for this tighter range. Now, you also have to be careful of something like this because sometimes when a market is waiting, it can just inch higher, squeeze really good, and then just have an implosion. In fact, one of the things I was starting to look at is if you actually look at the NQ, the futures on the NASDAQ, this is actually turning into a little bit of an ascending wedge, like when it makes slightly higher highs, but they're not that high or that impressive. This can be kind of an exhaustion pattern. So, I think right now it's going to be one of these things where we're waiting and drifting. And then if we start to get some bad news out from Washington, which, may be the next thing that happens, bad news before good, there could be a slam back down the channel. So I think it's important to just realize that this is a very tight range now, and we have like really a waiting sort of situation here. Some of the patterns I'm also looking at was the move on Friday was actually a kicker when it drops down and comes flying right back up. That is a kicker candlestick. It's a bullish reversal pattern. What's also interesting is if you look back to late 2019, we look back. It was interesting because at that point in time, we were coming out of the trade war with China, right here. And it was very similar. We were kind of above the 50-day, extremely tight price action. And also at that time, if you look, we had like a descending trend line that we were kind of fighting through. See? And the market proceeded to have a nice steady rally until the coronavirus, problem hit. So basically, this is, in my view, kind of a situation we're in here. At that time, there was also extreme geopolitical fear. And then when they lifted, it just kind of pushed higher. So I wanted to kind of point out that is in many ways how I view the market right now. I think we're in a situation like this. It's also similar. It's not the same, but if you look right in late 2016, there was a similar price there's some similar price action. Now I've noticed this is a pattern that happens sometimes with RSI. When basically the market holds above the 10-day moving average. I've seen it several times here. When there's a falling 10-day moving average and then you squeeze against it, RSI kind of turns positive, pushes through, and then you get something of a breakout. And that's another thing here. When you look at RSI pushing against this kind of falling line, we've seen this before. And it's one of these things when suddenly it's like this surprise rally. And to me, it's interesting when you look at the fact that, like I said, we've held these higher lows. So I want to just point out some of those patterns that are kind of jumping out to me. I think overall, though, the bigger picture is not even technical as much as it is fundamental and kind of macro. And on that front, take a look at some of these there's another article I did yesterday I think is really interesting because CPI is now lower than Fed funds, which is actually really unusual. So it happened way back in 2015 when inflation went negative a little bit, and it also happened in 2009 when inflation was negative. So aside from that, we now have a situation where we're truly in a restrictive territory. That the CPI at 4.9. So that really is telling you something. And the other thing, I've talked to this a lot, but the shelter costs continue to come down. In fact, if I just do like Fred CPI shelter, I was looking at this one, but if we look at this and we go to we get index and then percent change, we can go from a year ago and you can see the if you look at this, it has pretty much stopped going up on a percentage basis, which is interesting. And that's what you would expect to see when it begins to peak. So the rate of change is now slowing on a year over year. If you change it to just percent change sequentially 1 month to the next. So this is like March. Look at how this is falling. So now another thing that I have is the it's called the rent.com. I have it somewhere. The rental price index from rent.com. This is different data, but if you look at this, somewhere it has this chart, and this shows the year-over-year change. And there's a lot of other data here that's now showing that this housing cost is going to come down. And when you consider it's the biggest item in CPI, that is it's depending how you look at it, it's between 30 to 40% of CPI. So when this starts to fall, which is like almost a statistical certainty when you consider that everyone else is showing these same patterns, and you consider the fact that this is widely known to be a lagging number, we're going to have CPI that's going to start. I mean, it's already slowing. It's under 5% now, and I think the stars are aligned for a steady decline of consumer prices. The other thing is that yesterday's CPI was lifted by used car prices, which are kind of a weird one-off item, because they had been falling before, and then they had 1 month up, and it's just statistically, I think, again, the way to calculate the numbers is the bigger question. And then the other thing is that today's PPI, the biggest increase in the PPI was from this weird item of portfolio management or something, which I guess is what you pay mutual funds. I have no idea what exactly that number is. But the thing is, it was a random one-off thing. We're not talking about things that are really structural or consistent. It was like one item. And a lot of these things, who even knows how they calculate them? I think a lot of them is like you have an item that suddenly they just notice it changes, or the way they sample it, and suddenly you get this big increase. The point is that the real driving force of inflation coming down. Look at crude oil, look at copper. And I've said this many times that China had weak inflation numbers. A lot of the Chinese data just continues to crumble. This is copper going down. So I think right now, when you look at, there's some other things about the Chinese equities that are different, but the key point is China is exporting deflation, and our own numbers are coming down. Everything structurally at this time is pointing toward less inflationary pressure. And if you look here at the CME Fed Watch, it's now at 5.25. There's not even a 1% probability of Fed funds being there by December. So this just really is interesting here. And just yesterday alone, we basically lost 25 basis points of interest rates, and we gained, I guess, 25 of expected cuts. But the point is that the interest rates have peaked. That is where the market sees us here. So we have a situation of earnings. We're supposed to be down 6.5%. They're down less than 3% in Q1. And now interest rates are coming down. So this environment from a macro perspective is increasingly positive. And the other thing is that there's a huge amount of cash on the sidelines. Look at the AAII sentiment survey. It's interesting. This is just starting to tick more positive lately, which is interesting. But these are very historically depressed levels, which point toward bullishness. So I think it's important to realize here that this market has the underlying dynamics of this market now are increasingly positive, but we just have this debt ceiling thing. So and that's why, from my perspective, the market cannot really fathom the worst case thing happening with that. But it's also very difficult because, from my perspective on politics, it seems like the most likely thing is there's going to be an announcement at some point that, no dice, no deal. The market's going to start freaking out, and then they'll have a deal. That's more like, and so the problem is maybe it's better to be thinking of these levels further down here, as something to be aware of. The Keltner channel. Look at this Keltner channel. The Keltner channel is near down here as well, near the 50-day. So from my perspective here, we're just kind of handicapped by this, and we have to wait for something that's clearer. I've just known that many times buying in the middle of a range is a good way to lose money. I see these opening, there's this higher support building, and to me it's a positive sign, but we also have to realize that this is still in the middle of the range, and you just got to be careful. It's a very difficult sort of thing to be trading much right now. So I mentioned these things with the economic data. It's interesting that the bank runs didn't even really have that much of a negative effect on sentiment in terms of the impact on bank lending. So what's interesting to me is I kind of look at this. Let me just quickly bring over another copy of this so I can see better. Is that Google is now like on fire. This company released its AI plans, and the market really like it. So I think this is another kind of thing just to realize that we have a lot of these major growth stocks, and to me it's not just AI. It's the fact that what I just said about inflation, what I just said about interest rates, if that plays out, then the large cap NASDAQ stocks, the setup in these right now remains pretty positive when you think about it. They've cut costs. They're doing all these things to drive profitability. That's the fundamental company level stuff. If you then add to that a positive macro environment of lower interest rates, boom. I mean, it's again, it's an environment that people want to be owning large cap growth. And then on top of that, you have this AI thing. So on one hand, you have simple cost cutting, margins, buybacks, stuff like that. Then you have true growth narratives like AI. Then you have, that's another positive. And then you have the macro on top of that. So it's really taking a step back here. And it's like, this is the moment that a lot of people have been waiting for. And that's why I think, the debt ceiling and everything else, most people are just thinking like, the debt ceiling will get fixed. And then we're going to, there's a reason to think that there could be a breakout, through the February highs in the overall S&P. From my perspective here, there is also a trend line. I don't have it on my chart today in the blog post, but there's been a trend line here that I've been pretty much keeping right there. So I wanted to just point that out. I mean, this is an area that, we get through this. That's why I said this looks similar to that period back in 2019. All right. So another one that's interesting, and we're starting to see now, I've talked before about this idea of scanning for old IPOs that were these, overvalued kind of pie in the sky growth stocks 3 years ago when interest rates were at zero. And now some of them are coming back. Palantir is one of them. I mean, it's interesting. I will mention about this one is that there was a lot of negativity from the analysts. And this is one thing that's always been a concern to me about Palantir is its government business, because the problem with something like that is, you really don't know what on earth is going to happen when one project or another gets cut. I've tried to trade companies in the past that have a lot of government business. And if you don't know what they're actually doing, they can have some really rude surprises when suddenly, someone changes, one clause in some Pentagon, a budget bill, and you go from, tremendous growth stock to a dead company. That's what worries me about a company like Palantir, and the analysts seem to share that view. So I wanted to just, mention that. But this is one of these that fits into that pattern. Now, another more interesting one is Zscaler cybersecurity. There've been a lot of these cybersecurity stocks. Fortinet had good numbers, and this entire cybersecurity thing is, something of of an ongoing sort of narrative. And I think this is a thing we have to be thinking about long term. Zscaler was in a massive growth name at one point in time, and it's pulled back hugely. So I mean, this is one to be maybe kind of thinking about and doing some analysis and checking it out and seeing what's happening with it. Duolingo, this is just one I knew because it was an IPO at the time, but had a strong earnings report. This is actually a new 52-week high on this one. So this was another one that went public back during the whole giddy period, got hammered, and now it's trying to fight back. So this is another one that could be kind of interesting. Another one that I'm watching is Carvana. I mean, to me, this is one where I think we have to realize that this is a credit story. And the thing is, when a company comes back from the dead, you can get pretty dramatic, rebounds. So I'm looking for this one to see if maybe we go to drawing. Let's go to Fibonacci price retracement lines. And, let's see if we get something a little bit more down here, 38% or 50% retracement, something a little bit down. It's been up, 5 days here? And now if we have, 2 days down and we hold, this could be something that could have some opportunities. The short interest in this is very high. And it's one of these companies where if it simply doesn't go bankrupt, that it could, have significant upside in the squeezing. And again, with the Fed, if we move toward the Fed, going the other way on rates, a company like this, you could see a lot of these. I don't know many other distressed debt names right now, but those are the kind of companies that you could see some real, squeezes in. So this one is one that is just top of my list. We could start looking for companies that have enterprise value significantly above market cap, and look for some opportunities, some things like that. So I have a random pop up there. We're gonna get to that in a minute. The other one I just want to mention was Disney. I want to just say, to me, Disney is a really problematic company because, theme parks and ESPN, at the end of the day, I mean, there might have been a time in history when these things had a synergy, but to me, until Disney, and this might be, I hope this isn't like too crazy or heretical to say, but until Disney starts talking about breaking up, I don't think it's a good stock. They've got to just break up. They got to like stop being this weird thing with theme parks and movies that don't fit together anymore. So I think that right now the problem with Disney is it has three businesses that are really not that good anymore. I mean, ESPN is struggling. The theme parks are probably okay, but at the end of the day, I mean, I'm not sure it's really ever going to be a huge growth thing over the long term. And then the other thing is things like movies. None of them in and of themselves are like an amazing business, but if they talked about breaking it up or doing something strategic, that is what could light this stock back on fire. For now, I think it's in a troubled spot. But the problem with this is streaming. I mean, there's a company that basically went out there and like said streaming is gonna be the future of everything. And I think this is one of the problems with tech investors. They think that just because they take an old business and they put it online, that it's going to become the most amazing thing ever. That's what we have with, I mean, the most recent, a lot of these are like fintech companies that are basically just payment processors that are, it's a commoditized business, but they think if they make it a tech business that it should have a higher valuation, and then it doesn't, and it just ends up being just another company that rallies and dies like a lot of these fintechs have. And I think that was what we had with a company like Upstart. They thought because they took some kind of like subprime lending and turned it into an app that it was somehow special, but it wasn't. It was just lending to people with bad credit, and you end up just like this. But the key thing is, I think with Disney, streaming is really not that great of a business. And in some ways, it's a terrible business when you think about it because there's no barriers to entry. In the old days, you had to have a license from the from the FCC or whatever it's called, to have your TV channels and stuff. And now you don't have any of that. Now anyone can just go and compete head on with them. And I think that it's the market is starting to really see that. So the real problem with them was the fact that streaming isn't that amazing. When you take that away, you kind of have this strange lumbering business. So I wanted to mention that I think Disney here, kind of lumbering, and wouldn't be surprised if the market does kind of weaken if we see this thing headed back under 90. So on the other hand, though, there's more of these like these were the darling growth stocks of the pandemic period, and I think some of these are going to be interesting to watch, for pullbacks in the following weeks. Shopify is one of them, very strong quarter. DraftKings, this was one that everyone, was interested in because of the sports betting and everything else. And this is going to be an interesting name to kind of watch. Very strong earnings report. This could turn into like a major, sort of growth stock in my view. If they manage to nail this market, correctly, this is going to be the go-to name for investors in this. Another one was Uber, had a very strong quarter. Interesting to see some of these names coming together. And then you look at Airbnb, not good. So again, we're just starting to see now, and I think this is the thing that I've been kind of saying for a while, is that we're starting to see now a new cohort of stocks that will lead a new bull market. And I think Uber can be on that list. Some of these other names, Google will be one of them, but some of these other, sort of growth names that have been starting to work recently. Another name that has been a long-term growth stock that doesn't get that much attention, but is HubSpot. This has been a monster. This is like the long-term, this stock was in a long-term uptrend, classic growth stock. And, it had a good earnings report here. So these are all stocks that were hitting new 52-week highs recently after their earnings reports. So like I said, I think we're in an environment now where we are in a new tech environment. This is a new sort of environment for growth stocks, for tech stocks, and new names are emerging, or at least some forgotten names are coming back. And I think that's something that's pretty interesting. One name that I don't think is coming back is Tesla. I want to just mention that, I think Tesla here is, in a difficult spot with this kind of, falling trend line. But the other thing is ultimately, when you look at some of the data, it just seems like, automakers at the end of the day, it's funny. They all want to shift to electric cars and things. And, but it's kind of like history repeats itself, because now they're just creating a glut, and they're going to end up they're going to end up having to compete on pricing and doing incentives. I mean, it'll be just like the old days when they were, doing all these price incentives to sell cars. They're going to end up doing the same thing is selling electric cars now. All right. So just see if you have any questions, please put them in the chat. I don't see any. What is the download indicators mentioned? All right. I think you see there's that question, Lewis. It's at the top of that blog article that Manolo put the link in for. So we recently did a blog post also on Salesforce.com. This is another name actually here that we did this article here on Market Insights about it. There was some nice call volume in it. We wrote about, and we looked at this essentially a bullish triangle here, depending how you look at it, at higher lows, and then basically it did break out kind of through the top, and now it's coming back and holding this. So this is one for me here that looks pretty interesting. If you'd been following this, pulled back, held the 8-day exponential moving average. If you look at it on the hourly, sometimes these things have some interesting patterns as well. Look at how it came back on the hourly, and it went to the bottom of that Keltner channel and held this high from here. So to me, CRM is an interesting name. Earnings on this one are at the end of May. And so it had some good earnings, and it's part of this same sort of theme of a growth stock that kind of got religion on cost cuts and buybacks. And now it's hitting new 52-week highs, bullish ascending triangle here. Look at this, rallied on earnings, held, continued consolidation, potential continuation. We have like 2 weeks until earnings here. So this is one here where it's in that zone where, from my view, it might not be, really done. All right, go back now and look. I want to mention this one also. I'm just watching the semiconductors, trying to really figure out. I'm honestly not sure what to make of them. I said last week that they remain troubled because of the cyclicality and the negativity now. But I do think we just have to realize though that with the strength in technology and stuff in general, I'm watching this and I don't know what to make of it. I've been wanting to be. There's this part of me that just wants to be constructive on the chips. But when we really look at it, I'm going to get to this in a second. The relative strength has just really been going away in this part of the market. So let's look over here. I'll just show you. All right, so we're now on MT main key ETFs. And if we look on the 1 month basis, right? So we can see here the cyclical sort of stuff, risk on growth. We can see in the last month, like semiconductors have really lost it. Look at how the Qs are up 4% and the SMH is down 2%. This is telling you a lot. The strength is now in Apple, and it's also in, well, it's interesting. It's in Apple. I'm actually looking here at the sector level, XLK, but it's in Amazon, and it's in the communication stocks like Meta and Google. So it's interesting just to kind of see this when you break it down. You can see here that the semiconductors are really losing relative strength versus the Qs. And I think we had to be prepared here for a psychological rotation, maybe away from semiconductors. I've been saying this. One of these things when you know something like logically or philosophically, like, okay, if we have weakness in China, that should be bad for chips. But then, I want to buy them, and they look like they should be so good. But let's just take a step back and look at what the market is telling us and not what our heart tells us. And we're under the 50-day moving average. We're under the 21-day exponential. The 8-day exponential is under the 21-day. And the relative strength is breaking. What's interesting in this one is, let's look at our MT sectors. The SMH. And this is the relative strength against the the S&P here. So I think that it got here to a pretty kind of frothy level, went back to that frothy level. This is a ratio of SMH to SPY. And, when you actually look at some of the numbers, AMD did have a warning. I mean, the numbers have not been very good on chips. And there's a lot of I saw some other data just about, weakening. I'm trying to remember what it was. It was just one of these articles, you see like one of these Reuters articles that comes out when it cites, it was one of those guys, was it IDC? It was one of these just industry groups. And they basically said that chips really like the demand is weakening. And so just something to kind of, be aware of here with the cyclicality shifting away from, the cyclical stuff toward the lesser cyclical things. Remember, within technology, when you have falling interest rates, that's going to be better for software companies. It's going to be better for communication stocks. It's going to be better for the higher multiple growth stocks, and not as good for the cyclical stocks. And semiconductors are more industrial. They have an industrial component to them that is more cyclical and less growth. So I think the semiconductors here, I'm watching this, and honestly, it's looking to me like this is not a positive sign. You have this move down. This could turn into a bearish flag if we break this level here. So I wanted to just kind of point this out. All right. Okay, another one, and we did this one on TradingView. Death cross on the 10-year. To me, this has been a big one. Look at the 10-year treasury over in TradeStation. It's $TNX.X. Now, like I said, interest rates, are important. And if you look at this here, I mean, the 10-year treasury, that 50-day went under the 200-day moving average for the first time in over a year. And I think when we look at this now, it's really hard when you look at where oil is, and today's jobless claims were worse than, they were the highest in many months, higher than expected. So when we look at the economic data, we have the jobless claims, we have the low inflation, the lower PPI and CPI, we have lower energy prices, we have the deflation coming out of China. These things here, to me, point toward lower treasury yields. Also, as counterintuitive as it sounds, and this might not be correct, but if we were to see a sort of panic situation of a default, as ironic as it is, it might actually be positive for treasury prices, and usually as a flight to quality. And as bizarre as it sounds, if the United States were to have some kind of default scenario, there's a chance that people would actually buy treasuries because that is the go-to safe haven. So I just think it's interesting here with this environment, to see that the way treasuries here have lower high. The 10-year here, this to me is a pretty significant thing I want to just point out. This is telling us at this point that interest rates have also, this could be really marking a high of interest rates and telling us that the next move is lower. We have a support level here, which is actually pretty important, around 3.4 on the 10-year. And, if we break under this range here, that's going to be something where there will probably be a lot of continuation and a lot of buying in the bonds. So people probably are waiting and to chase a move there. So I wanted to point this out. All right, another stock that's interesting that had earnings recently was Mercado Libre. Now, we've seen this pattern. Let's actually put on MACD here, because I've seen this pattern before. You have good earnings, tries to rally, but you had falling MACD before. So stocks like this, very often they try to rally, they get beaten down. Then 2 to 3 weeks later, MACD improves and they go to new highs. So this is another one. This is a Latin American e-commerce stock. And this is also like, a pretty long term. This has been a pretty significant growth stock. I mean, if you look at this, how this one has performed over the long term, it's been, a pretty significant mover to the upside. And So, I mean, this is another one here that I think this is kind of a classic growth stock. I mean, it's not a Google, but you're looking at a stock that is in the same kind of league as like a Shopify, or something like that. And it's been breaking out. And I think this is interesting, hitting new highs. The one thing, like I said, the MACD is weak here. So let's watch this one. Look at Crocs. We did an idea on this one, and there's a classic pattern. MACD was falling. It had a good earnings report. Gapped higher, comes down. Then MACD turns positive, and we basically did a trading view idea on it somewhere around here. And I actually traded it myself. That was a nice one on me. Rallied, held the 50-day, and I got it up to there. And then I sold it. Basically, I sold it right around here when it went back to that high. I'm just like, I'm out. I didn't want to hold it through earnings. Now, earnings were bad, and who cares about that? The thing is, this is a pattern. Look here. It jumped above the Keltner, and the MACD was falling. That means not ready to go yet. Then it comes down, and the MACD turns up, and then you get then this bullishness gets expressed, 2 months later, a month and a half, 2 months later, people don't act on it. So if you wait for that MACD, it can be an interesting pattern. So just be aware of it. Now let's look again at Melly. Same thing. Rallied on good earnings with bad MACD. But now look what MACD is trying to do. So this is, to me, what the similar sort of pattern. And I've seen this a lot. We did this actually on it was PagerDuty. We had mentioned this one a while back. It had a good earnings report here with bad MACD. I can't remember exactly where we were on this, but this was another one that had a similar pattern. I remember we talked about it on this webinar. There's another one of these kind of growth stocks that's coming back. Procter & Gamble is interesting to me because this one came back and held the 21-day exponential moving average. It popped up using my MA tools. Somewhere is on here. And then the other one, I did I do these scans that, I have scans that run every night looking for things like Keltner channel pullbacks, and Unilever, it's another consumer staple stock. Consumer staple has been doing better recently, comes back and holds that Keltner channel. So there's just an interesting one as well. So it just kind of shows that, you can always have these scans running in the background using things, especially like the, the Keltner channel. If you have the moving average is bullish and then you look for a test of the Keltner channel, it is a good way to start, looking for momentum pullbacks. My kind of mover of the week, and this is one when I just look at a company that's kind of crazy, unusual, that we may not know about, but this company, Opera, is just insane. It is a Norwegian company that runs some kind of browser that I don't think it's very popular in the United States, but these guys are doing all kinds of AI stuff. And if you look at their earnings report, I mean, the numbers are phenomenal. And it's just been coming back from the dead. It's up a lot, several 100% since Q4. But this is also one of these kind of crazy growth stocks. It's not in any index. And this is the kind of stock that, like, even in a debt showdown situation, like, won't even care. It's just kind of standalone sort of thing. And there's a lot of stocks like this now. That's what's interesting. There's a lot of these kind of crazy growth stocks coming back. And that's another reason about this market that's interesting. The kind of new companies we're starting to see when we look back in 2030, and all this is in the rearview mirror, and you look at the stocks that went up 5,000%. We could be seeing some of them here, and now's the time to be thinking that way because the market is near the end of this bearish phase. All right. So I have a question here. I have two questions. My current analysis of these stocks and short-term outlook. My short-term outlook is that it's gonna be driven by the political situation. My view, and I told this to Reuters today when I was talking to them, but basically, if it was not for the debt ceiling, in my opinion, we'd already be at a new 52-week high. I think that everyone knows that is weighing on the market now, but I think that is an issue right now. So I'm not going to bet on anything, but what I would say here is that this is the level. If you look at the cash, the SPY, like I said, this is the level that I'm watching for us to hold. But I'm also recognizing if I wanted to do anything, I mean, my view more would be that there's a decent chance of us slamming down back toward these lows again, toward the 50-day, toward the bottom of the Keltner channel. I would say in the absence of the debt ceiling, we'd already be through this resistance because the inflation numbers are just, I mean, you have to, I listen to some of these people on CNBC about, the Fed's not going to, they're so wrong about what's happening with inflation. If you look at the things like all these food prices coming down, I mean, we're going to be at a spot in a few months from now when people look back and they're like, oh, inflation's kind of not a story anymore. That's how it looks to me looking in at the economy. So, and like I said, the earnings very good. So I think right now, there's a paralysis moment, and they're horrible and they're annoying. And I think the best thing to do is to just kind of wait. All right, what do I think with the regional banks? In my view, these guys right now have more problems, and it's going to be kind of the problem is it actually gets worse before it gets better. And the reason is, let's look at, I have over here, somewhere I have on, I do have a chart on TradingView. I have more charts on TradingView, which is useful. I'll just show this. There's like, this is one of my many charts that I mark up to kind of know what I'm looking at. But I'll just look at this chart, and let's look now at my watch list, because I have a series of treasury yields here. And this is important in my opinion. 6 month is still way up here. The 2-year is inching lower, and the 10-year is falling in TYX, which is a 30-year. In my view, what we're going to see happen is the curve is going to get more inverted, which is bad for these guys. And if you're, one of these people, if you're taking your money out of the bank and buying, short-term treasuries, those are not going to fall for a while. So the fact is that they are stuck in a spot where they're going to continue to see deposit outflows, and they are going to get squeezed by a curve, sort of. They're going to get squeezed by the curve inversion. The other thing is, if there is some kind of default or something, I mean, it could be horrific for the banks, because what happens if you're like some company that has a contract with the government, and I don't know, just anything, and you're not going to get your payment on time, and then basically you could suddenly have like a whole bunch of like business just completely messed up. You could have massive defaults across the entire economy. You could have, just imagine if you're a contractor, some kind of contractor that's waiting on the money to come in from the government so you can pay your money out to your employees. That stuff's like all ACH and stuff. What happens if the money doesn't come from the government and you have like, 1,000 paychecks going out? I can't even imagine what it will do to the banks. And I think that's one of the problems. And it's one of these things when it's so terrible that you can't even, imagine it will happen. But the thing is, if it does happen, I mean, the banks are going to be a horrible place to be. So from my perspective, these stocks are, damaged for a while. And until we have some kind of improvement on the interest rate situation, I think they're going to be pretty tricky. And the other problem is we don't really even know what the numbers mean on them anymore. I think you need to remember about banks is that, their profits are all kind of, I don't want to say fictional, but they're modeled, where everything is based on a huge number of assumptions. And if some of those assumptions change quickly, then you can go from making a lot of money to losing a lot of money very quickly. Because of the fact is that they're just going from one quarter to the next. So if they hold a bunch of loans that suddenly change in value, or their deposits change, things can change very quickly. So I don't think their numbers mean that much. Their valuations don't mean that much. No one really knows what to make of them now. And if some of these regulations change, it's not clear what that actually, what their earnings power would be. And then the other thing is, there's apparently some new Basel rules going in. I've seen some articles. There's some new Basel rules. The town in Switzerland, the banking, the Basel regulations. There's a new set of rules coming in a year or two that will also be problematic. So I think, unfortunately, American banks have not been run as well as European banks. I think the Europeans have taken the medicine, and I think some of our banks have not. And so I think right now, honestly, the banks are kind of in a tricky spot. I'm kind of more interested. I mentioned a while back on the Silicon Valley, but I was talking about, Banco Bilbao Vizcaya and Santander, these kind of European banks that are, very not well known, but these are massive institutions. They trade very inexpensively compared to a lot of American bank. These are interesting names I would be looking in terms of banking. I'd be more interested in some of the big European banks. Long term versus short term, I would agree that for me, long term is over a year. What would I want to hold? Things like knowing to hold things for the long term. Thinking about how to actually define that. For me, it's all about, kind of targets. I don't view things by time. I view things as kind of price targets, levels I think they're going to go to want to sell. So, you know, I'm just looking at your question, trying to answer that. All right, let me keep going here with some of the other things I have. Let's just quickly zip through some of the things that we're seeing here. I want to just quickly go here to my radar screen. So just, some of the things that are popping out in this normal sort of analysis here is, like I mentioned, it's interesting to see the financials up, but a lot of these things, I'm not sure when you look at any kind of time frame, longer time frame, they all have a kind of just coming off lows and stuff. What's interesting to me when I look at the overall performance is that we've seen strength in biotechs, which have really come to life recently, and housing stocks. And we've started to actually see, some interesting strength in some of the consumer staples names like Procter and Gamble and Unilever. Pepsi has been doing very well. I've been watching Coca-Cola, and this is actually kind of interesting here. This kind of pullback in this name. They had a decent earnings report and it pulled back, but I think right now we are seeing this sort of this safe haven, and I think that at this point, from my view, it's pretty difficult to imagine interest rates going higher at this time. And so, from my perspective, the things that benefit from falling interest rates and less of a cyclicality are the places where money is going to want to be. And that's where I'm kind of focused in terms of macro things. Now, I'm not going to do anything with the price grid today. Look at the MA tools. These are some of the other ones. This is the S&P 500, but we can find things with this that are having interesting pullbacks. So, for example, Coca-Cola should be on that list. I'm not sure why it's not. Well, maybe because it's not rising, but anyway, this allows us to find stocks that have, kind of pullbacks and moving averages and things like that. And I find this an interesting thing to kind of look down the list and see what kind of opportunities it might give me. I've been watching, Fiserv is one that I've been watching. It's kind of forgotten sort of growth name. Grainger is this, these interesting sort of American industrial names that has been strangely outperforming. And if you look at their earnings, everything about them have been very good. And I've said a lot that there's a trend toward American reindustrialization. It's probably not a stock that a lot of people are super interested in, but it just popped up on here. I was just noticing that. So again, this is just a tool we like to go through and kind of look at things that are having, simple pullbacks and moving averages. One way to look for things. I'm not doing anything with fundamentals today. All right, and then let's look over at our breadth. This is a little bit of a problem here when we have the number of stocks, the 21, the stocks under the above the 20-day is less than above the 50-day. We've mentioned when the blue line crosses up or down, it is an interesting signal. We even created a strategy, and we did find that it is a successful strategy for trading the S&P. It actually does make money. If I actually look at this and I go to data and I go to strategy performance report, we can see that this strategy actually is surprisingly successful. So when this closed, when that crossover happened, and if it's interesting if you look at the market here, because it really hasn't gone very far. since then. And after that point, it went up more, but then it also came right back down. So this is now a shorter term sort of, drag. That will automatically happen though, just from the market stop, stalling. So I also wouldn't put a huge amount of stock in it. Let's look here at this sectors, because this is one I like to look at. I might be able to make this a little bit bigger. So actually, let me I want to just see if anything popped up with it. And home builders remain the top performer in the last year. And this thing down here just kind of shows that, home builders are now really, just one of the top parts of the market. And it disgusts me when I look at almost any financial news that they are so ignored. It's troubling to me and pretty disappointing, because it's such an obvious thing right now that the home builders have a very strong fundamental environment. So I want to this thing allows us to really see where stocks are relative to the overall market. And if we look at this year, everything around home builders, continue to look interesting. And I would say long term, if there's a single industry that to me has a clear sort of positive fundamental backdrop, I would say, home builders are one. And then, some of these bigger growth stocks also seem to have that positioning. I do believe that long term, some of these names like Grainger actually will probably have, continued upside if you're interested in some of the more obscure industrial stocks. I'm not gonna do anything with this. Let's just look at this S&P chart. So this thing here was a buy this morning because we had stochastics were down and the 50-hour was still rising. And now MACD is falling and it's just kind of sitting here. No real signals on this right now. All right. Now, the last thing I wanted to show you was how to turn to modify an indicator and to make it do like an alert. So if we look at something now, for example, I'm going to go to edit easy language for moving average line. Because I've made a lot of alerts talk to me. And what you can do now is I'm going to go to save as. I'm going to call it, talking alert just for fun. All right, hit OK. Now I do that because I don't want to modify my existing one. So what's interesting here is if you actually look for, as your keyword search for alert. Okay, if alert enabled. Now, one of the things I don't like about the initial version of this is that it just says price crossing over average. It doesn't tell you the symbol or anything else like that. So I've done this for some other ones. And let me actually go to I have this other one called EMA with alert on cross. Go to this. And I think you guys actually have this indicator. So if you look at this one, wait a second. I think I can actually just do it from this. So what you do is, if you put in symbol is the existing word. And then plus. Do it like this. What will now happen is the alert, it'll actually say like Apple price crossing under average. And what you can also do is you can modify something like this. And you can put in like, for example, 50-day moving average. And when you do that, it will take this variable up here. Actually, wait, that won't work because it actually needs, I'm trying to remember now how to do this. That was one thing I just kind of added as a side thought. There's an indicator when you basically turn text to, you know what? let me circle back on this one next week, because this is, I should have actually gotten those indicators. I forgot to grab this some keywords. But what you can do is, and if I do this now, hit F3, what will happen is if I go now and I can actually add this to something like a radar screen. And I can now add it as add study. What do we call it again? We called it talking alert. And then if we add like some stocks to this. And if we just go to now, like this is now set for the 5-minute interval, it doesn't matter. What you now do is go to alert, and then we go to enable alert once, and then we go to alert, and then we go to, actually, we're going to go to studies, edit, and then you go to alert, and then here you go to use custom settings. And then we go to configure, and then we go to audible voice text to speech. And then I still like to make it visual, because then it actually, you actually see what it is as well. And if you set this, what it will then do is it'll say something like AAPL, price tested moving average. So there's a lot of things you can do just by going in here and making some changes. And in this case, the whole thing is set to text. So the symbol is a text, and the this message is a text. You put in like the plus, and then you can just use this. Make sure to put a space in though, because otherwise it'll have like the symbol and then the word will run up against price. So there's some interesting little things you can do with this that I wanted to just very quickly show you guys. Let me actually see here if I can. I do have one other really quick. All right, it's called num2str. So this is the actual thing. If I go now, this is a command that will change a number into a string. So if I go here, price crosses over, and then I do this. Let me just make sure I have that right. Num2 string, I need to put in a 0, 0. What this will now do is if it crosses, now look at the way I actually did this. I'm going to put it into chat. What this will do is this will now take the symbol, which it knows. It will then create a custom little string that will say Apple price crossing, it'll say AAPL price crossing over length, which this is the 9 moving average. It'll take that, it'll turn the number into a text. And I actually I'll put one more space there, right? 9-day average or moving average, whatever you want to do. You can then change it, right? And you can do different names. Now, the reason you want to do that is, say you have a radar screen with like 10 stocks on it or 100 or whatever, and one of them has the alert happen and you want to talk to you. If you don't do it the way I just showed you, it'll just say price crossing over, or it'll say alert or something like that. It won't say the ticker. It will appear on your screen with a ticker, but it won't talk to you with the ticker. So you want to actually change it when you use that functionality. So I want to share that with everyone. I'm glad one of you guys want to know how to do that. I've had a computer running in the side that I've had it talk to me and tell me when the market does stuff. And last thing I'll add is you can do this with show me's as well, where you can have it. I like doing it for something like this. And if I go to, let's add here the last thing, I'm over time, but indicator, then we go to show me, and then you go to like new low for day, right? And that's always maybe just new. Wait a second. Maybe it's maybe it's this one. I thought it's the new low for a day. I thought it actually had this. And it will just talk and it'll just tell you when things make new highs or lows. But one of these here, it might be the new intraday high or low. I'm not sure, but it will actually tell you when a new low occurs for the day. So you can do a lot of stuff with this if you look into the show me's and the different things like that. So I want to just kind of tell you that if you, the one thing I'll just recommend is that you open the easy language, save as a new version so that you don't mess up the original one, and then do that. But just the key tricks to know are using symbol and using num to string. Because otherwise, say I take this out just to show you, and I just try and do length, right? Look what's going to happen. It's going to say string expression require expected here. If you don't know, in the encoding language, a string is a text, it's not a number. So it's a different kind of variable, and you need that little function to turn it back into a string that can be read. So hope that helps. I'll see you guys again next week. Take care. You know, if you also, email me at DaveRussellTradeStation.com and I can see I can help you too. Always happy to help. Have a great day, guys.